It's a pleasure to have with us here Mr. Jaspal Bindra of Standard Chartered Bank. Mr. Bindra, many thanks for talking to us. What's the mood you're picking up here in Davos this year?
Well, it's a little bit on the confused state of mind, I think. I think there are people who are hoping things continue to be as buoyant as the start of the year has been, but people can't find enough rationale why they should be that way for the year. So I think people are hoping and not really knowing how and why.
And that's the real worry, because on one hand, people want to be more optimistic, but there are no clear signs that point towards that optimism.
Well, the one thing that is positive is that the euro is likely to stay. You know, there was a lot of debate last year at this time. And I think the US is definitely on its way back. There is still the moving cliff challenge, which we'll have to deal with in March again. And the stock market has responded well. There is sufficient liquidity. I think the transition in China has happened and it's been reasonably smooth. So, you know, people are hopeful on that basis, I guess.
But is the exuberance, especially in global equity markets, a little too premature?
Well, it's difficult to say because, you know, when you look at where things were before 2008, we are sort of marginally ahead. So it's not that bad in a 5-year period. But, you know, when you look at from a month to month, it looks like it's moved up a lot. But I think it's the underlying rationale that has to be established.
The focus ever since the crisis in Davos has, of course, been on bankers and the big debates that take place here, banks being too big to fail, and of course, that remains the dominant theme. Are there concerns about over-regulation, and what's the future looking like?
I think when you look at it from the banker's perspective, clearly there is some emotion around regulatory environment, etc. But the reality is that we need regulation because it wasn't effective in the last crisis. It is just that the unintended consequences of the regulations have to be managed. The multiplicity of regulation, which is at cross purposes between, in many markets, between local and global regulators' requirements. I think those are more the challenges than regulation itself. We would like more capital behind more risky business. We wouldn't like the taxpayers to bail out banks, however big or small. That should be, you know, they should be allowed to fail. We think banks have an obligation and a responsibility to have resolution plans in case they get into trouble.
Also, the overall theme of easy money, is that a trend that's really worrying people, especially economists, and what will be the consequences?
Well, clearly easy money in the past has had its consequences in the medium to long term. But there is always good measure for short periods of time to have easy liquidity. And we've had it for a while. The question is up to when. You know, there is a point in time where it won't make sense for it to continue. It will get abused. Some would say it's already getting to that point. Some would say it's a little bit away. But I think, yes.
Some are already saying it's become the new normal.
I don't think so. Interest rates can remain at a low if the economy start coming back. So I think what we will see is probably in the next 3 years interest rates rise in the West, but in the very immediate term we might actually see interest rates drop. I think India could see anywhere between 75 to 100 basis points drop through this calendar year. I think other markets in Asia could also see not as much but a smaller drop.
And that brings me to India. I'm glad you mentioned it because there's been severe criticism that the RBI has seen over the fact that it's taken a bit too long to sort of ease up and to cut rates. Would you share that view?
I think it's an impossible task for the regulator to balance between inflation concerns and getting the growth right from the interest rate drop. So I think there are several who would say that in spite of interest rates being high, inflation hasn't been contained and to that extent ineffective. On the other hand, when the RBI did drop 50 basis points, we didn't see a dramatic jump in industrial production as well. So I think there is an argument. I would think that if we get the 100%, 75 basis point in that kind of range in this year, that'll be a great signal.
It will be an important signal that clearly industry is watching out for, policymakers are watching out for, but many who actually believe that the kind of slowdown we've seen in growth is also driven by the fact that we didn't see interest rates coming down when they should have. And even though inflation was high and sticky, RBI should have perhaps acted earlier.
Well, I think there are two ways of looking at it. Some would argue that it went up too quickly in the growth phenomenon, and then it hasn't come down as quickly in the meantime. But the supply side has been the real pivotal problem. I mean, if we had the supply side fixed, the inflation wouldn't have galloped to the levels it would have, and we would have probably seen a come down in interest rates much earlier. So I think the challenge still remains on the supply side.
Right, but do you think the crisis also questioned basic economic theory, the entire dynamics between inflation and growth? Do you think there is new thinking emerging in these areas?
I think there is, but there's also a lot of learning. And the first learning is that till we don't fix the supply side, we are not going to be able to arrest inflation. Then there is the whole challenge of consumption. You know, as with increasing wealth, with increasing sophistication in people's lifestyles, etc., you're going to have a consumption boom, which is going to fuel inflation for some time to come. And then most important, for India particularly, is the energy bill.
Sure.
And till oil prices remain at the three-digit number, it's going to be quite an expensive affair.
Which is exactly the point several economists continue to make, that high inflation is something that we perhaps have to live with. Why sacrifice growth because of that?
I think there are two factors to that, because the way high inflation impacts the upper end of society, I think the argument you make is very valid. But there are people who live on a more basic subsistence for whom inflation is a real killer.
Right.
The price of onions, the price of potatoes, the price of cooking oil, the price of transport, etc., is a real kicker. So I think if you're really going to have an inclusive India growth, then I think it is important to monitor the inflation as well.
Let me now talk about your India plans. Share with us some of the plans that you have in the coming years.
Well, I'm very happy to tell you that I was in Chhindwara very recently to open our 98th branch.
Right.
Since then, we've already opened our 99th branch in Agra, and we are looking forward to opening our 100th branch in the next month.
That would be quite
so
an event
that'll be
for us,
nice for
yeah.
us to have completed a 100 branch expansion in India. And of course, business, we are hoping for it to get more active than it has been in the last 2 years. Business has been slow in the last couple of years.
Right, and that brings me to the entire slowdown in India. How worrying is that trend, and do you think the government's finally got its act together?
I think first the trend is worrying because there's been a lot of restructuring that has been forced upon the system. There is some that proactively is desirable to do just because of the sectors that the industry is stuck in. But I think from the government's point of view, with the whatever the NIB equivalent is being called,
right. The Cabinet Committee on Investments.
That's right. Once they start meeting, which I believe end of this month is their first meeting, and we are very eagerly looking forward to how much they can expedite the mega projects. I think if the mega projects start going, that will be one savior, because it doesn't just help the mega players, it also helps a huge number of ancillaries along with it.
What about the banking regulation, new bank licenses? How significant is all of that?
I think, there's going to be huge requirement in terms of vanilla banking on the supply side in India. So getting another 5, 6, 7, 8 will just be right, and even more. So we're quite looking forward to having it. It's just getting it in the right places and, the conditions that will be hopefully not too onerous for new operators to be keen to come into banking.
A quick word also on the Indian banking system, concerns that were raised on the health of the Indian banking system, rising NPAs. Do you think the concerns are overhyped or are there real fears?
I think there is too much focus on some of the large borrowers in the very core sectors. And I think the reasons for those are known, why they have had liquidity challenges, which is really the problem. I mean, most of the corporate borrowers who get named in terms of creating this perception are really very asset long, but very short on cash, on liquidity. And I think that's a mismatch, because growth didn't sustain in the way it was anticipated. So it's a judgment call. But I don't think so there is a real underlying problem. Even the companies that have had trouble and have had to be restructured, their underlying business is good. It's just that their asset liability mismatch overwhelmingly difficult for them to manage.
But is it a trend that's increasing, the entire asset liability mismatch, and is it making banks more cautious?
Oh, clearly, the banks have got more risk averse, but the real challenge is that in itself is self-fulfilling. If the banks sort of don't help out and don't come to the rescue of their relationships, then they will almost certainly force NPAs in those clients. So I think there is a little bit of a give and take here, and I'm sure there is a category of customers who deserve help because they are willing but unable. But there will also be in that process some black sheep who will abuse that privilege.
Right. Any other dominant themes you're picking up here in Davos as a closing comment?
Well, the Cameron speech this morning was obviously the big draw today. So today has been sort of a large focus on that and how UK fits with the euro or within it, around it, etc. But I think the big mood is still very much sort of centered around Europe and where Europe is going. There have been lots of false starts and hopes, etc. And I think people are coming here to watch Europe. It is still 25% of the world's GDP.
Right.
So there's no escaping, any kind of challenge in Europe and say, we are immune from it. So I think it's relevant to all of us, and it's good that we are all here.
All right, Mr. Bindra, we're going to leave it there. Many, many thanks for talking to us and sparing time to be with us.
Pleasure.
India's #1 news app. Just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.